how to day trade using moving averages, crossovers like a pro. How to day trade using moving averages, crossovers like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of the video is how to day trade using moving averages, crossovers like a pro. All right. In this tutorial, I want to share with traders how one can use moving average crossovers, okay, for day trading purposes, okay, and make excellent trading decisions like a professional trader. I will highlight to traders the common day trading mistake that traders are making when they are using moving averages crossovers, all right, and I also share with traders the best approach one should adopt when one is using moving averages crossovers. All right. But before we can start day trading using moving averages crossovers, we must have what we call a valid trading setup. All right. So the time in London now is 52 minutes past 1 p.m. In New York, 52 minutes past 8 a.m. In Australia, okay, 52 minutes past 6 p.m. All right. So the purpose of this video, in fact, is to show traders on a live chart when one is using moving average crossovers, the thing that one should know, all right, and the thing that one should avoid when one is using moving average crossover. I will also demonstrate to traders how I enter my day trade. So I will start with how I select the trading setup, okay? And I want to show you my signal and also my entry point, what I'm looking for, okay? So you may also learn something from it, okay? So I encourage traders to watch the full length of this video. If you are a day trader, to watch the full length of this video, all right? So you may learn, okay, from my experience, all right? Okay, so first thing first, we are looking for a trading setup. It's very simple here. What I'm looking for, we are trading a Dow Jones index. Okay, as you can see now, the New York Stock Exchange is not yet open. So you can see that the time is 53 minutes past 1 now in London. So New York is not open yet. New York will be open in exactly 37 minutes. So what I'm doing here, I'm preparing myself for day trading. So the first step is the preparation. All right. During the preparation, we are looking for the best setup, the most reliable trading setup, the high probability trade setup that will give us, okay, a clear-cut trading signal. Then we will select a low-risk entry point. So the market is not yet open, New York is not yet open, but I'm preparing myself to trade Dow Jones Index, okay? All right, so now on a daily chart, I'm using daily chart. You can see that the blue line here, that's the moving average 200, and the red line is the moving average 50. So the moving average 50 is below the moving average 100. This is what the market call, okay, the death cross. All right, so the market becomes very bearish in theory. All right, in theory, all right, the market becomes very bearish when the moving average 50 goes below the moving average 200, and the market becomes very, very bullish. Okay, in theory, when the moving average 50 goes above the 200. But now, I can assure you that though the moving average 50, you can see here, is below the 200 on the daily chart, today I'm looking for opportunity to buy, okay, the Dow Jones Index. Okay, I'm going to buy Dow Jones Index when the general public, looking at the moving average crossover, traders that are trading the indicators instead of the price, I want to show you that today I will buy Dow Jones and it will go up. All right, the market is not yet open. I can tell you the market today will go up very fast, will go up big time. All right, it has a high chance to be quite bullish today. Okay, so that's why I want to buy though the moving average 50 is below the moving average 200. All right. The general market will give priority, will try to sell here, but I will buy instead. Okay. So my trading setup is very simple. Okay. You can see that the price is just sitting nicely, so to speak, on the moving average 50, sitting nicely on it, on the moving average 50 here. That was yesterday. You can see the candlestick bar is what we call indecision. Okay, the price went up all the way up here, but was sold down here. There are sellers here. If you look at this candle here, what I see to traders, you see the shadow on top of a candle. There are sellers here. But today, I will buy. I will buy here. All right? So what I'm doing, in fact, I'm buying at a resistance zone. Okay? You can buy at a resistance zone if you know how to do that. Okay? You can sell at a support level if you know how to do it. Okay? But now, I want to buy Dow Jones above the level of 16789. That's my level I'm watching. All right? Why? Why this is a bullish trade setup? We have two candles here. We are watching. You see this one here? It's a very, very bearish candlestick. So the price opened here. You can see it went up all the way here. But traders sold it and it went below the opening price. So it closed bearishly. Okay? So this day is very, very bearish. Now, the following day, you can see we have another bearish candle. So if you see this pattern like this, you know that you should sell. But the following day, we have another bullish candle, and then the price continues to go down after that, okay? But what I want you to understand is that in this zone, okay, where I draw the red horizontal at 16789, on the 17th, this is a 17th of, September, all right, 2015, it was very bearish. Look, the price went back to the same zone, very bullish. You see how it went very bullish to that zone, okay? Now, it's to retest whether there are still sellers here, okay? So, probably, what has happened, as I told you before, where there are orders, that's where the price will go. So, orders were placed here to sell, the orders were filled, and the price went down, okay? And then the price started changing direction here. As the price starts changing direction going down, trader place again orders here to sell. Remember, where there are orders, that's where the price will go. You see how the price ran fast to fill these orders. Now these orders are filled. Which orders? Selling orders. They want to sell. These are selling orders. They were here because of what has happened here. So people want to sell again here. But price went down, start going down. People place order here to sell. Remember, the most sophisticated traders will buy at a specific price and will sell at a specific price. They don't just come into the market, buying here and there. They want to buy at a specific price and they want to sell at a specific price. Okay? Either they want to buy below a specific price or they want to sell above a specific price. Okay? So, these orders to sell were filled now. But look what's happened that day. Okay, that was yesterday. So price went up nicely here to fill these orders, which were sellers. But as the price started going down, it didn't close, look carefully, it didn't close bearishly like here. The same area, the same price zone. This day, the price closed below the opening price. But yesterday, did not close below the opening price. What is it telling us? The language of the price is telling us that these people who were selling here, who placed order here to sell, today they will be forced to close their bearish position because the price will run fast. How do I know? It's here in front of us. The price. Okay? The price is telling us exactly what is happening here. That's why I want to give priority to bullish signal above the level of 16789. All right? Okay? So this is my trading setup. Very simple. Want to buy, give priority to bullish signal above 16789. Does it mean that the price cannot go down? Well, if the price is going down, I will not sell it because I have my warning line 16789. If it crosses that level, start going down, I'm out. I'm out of my trade. I will not force it. I will not pretend that I'm the brightest trader out there. Okay? So I will just come out. Simple. Cut it, go. All right? No ego in it. Okay? I'll just cut it and go. But if the price is doing exactly what I'm expecting, I will take advantage of it. Yes or no? I will take advantage of it and profit from it. Yes or no? This is what we will see. So in order that I force it, I will use what we call a top-down trading method. So this is my trading setup. Simple. All right, 1, 6, 7, 8, 9. A top-down trading method consists of using at least 2 time frames, minimum 2 time frames. One can use 3 time frames, one can use 4 time frames, even more, but minimum 2 time frames. All right, so here it is. I tell you now, this is my preparation, and I explain to you why this candle here is telling me that today there is a high chance that Dow Jones will continue to go up. Next thing, apart from these 2 candles, look carefully. So we have what they call the death cross. This is what they call, okay, moving up at 50 goes below the 200. So market, it was on television, people were talking about it on the internet, that Dow Jones, okay, moving up at 50 goes below 200. It's a big news in the financial market. So on that day, you can see that the price ran down very fast, okay? Remember the title of the video, how to trade, how to day trade using moving averages, crossovers like a pro. I will be talking about this crossover and what is happening here, okay, why I'm buying when we have a bearish moving average crossovers. Again, now, the first thing that I can tell you now, because the market is not yet open, okay, so I've been talking to you now for 11 minutes, okay, so the common trading mistake when one is using moving average crossovers is that traders will trade the moving average. So moving average goes below, they sell. Moving average 50 goes above, they buy. But sometimes people are lucky and it works beautifully. Sometimes they are not lucky and they get whipsawed. They are taken out of the trade and they dump it and they hate the moving averages. I love moving averages because I understand them, okay? So now looking at the price, because we are not though, remember, the technical indicators will give us the warning. The price must confirm the warning, okay? Or give us what we call a direct signal. Pay attention carefully, okay? So here, look at this. The moving average 50, the red one is below, moving average 200, the blue one here. What the price has done. On this day, as you see, this time you see the price went down fast, very fast, down, down. Okay? What I said to traders is that Dow Jones has a high chance to go back down to the level of 155.51. Okay, you forget? Okay, follow us at 24 Stock Trader. Okay, that's what I said to traders. The Dow Jones has a high chance. You see my line? This is the orange line I still have on my chart here. 155.51. It will come back to that to retest that level. But before that, it will go up a bit again before it will come down. Okay. So let's go back again. I want you to remember that, okay? So look here, you see, the price went down after the crossover and displayed this low. So this is the first low after the warning. It's very important for me. This low is very, very important for me. If the price fell to go below this level, all right, if it fell to go below this level, to display a new lower low, because in a downtrend, when I pay attention to the new low, I won't be that bearish. Okay, it makes sense? All right, so there, this was the lowest low after the warning. Okay, then we have a higher low. Okay, all right, price tries to go up, but find a resistance on this high here. Okay, so we say game on. It's not going anywhere. Now, as the price, they sold it again here, price going down. This is the third low now. So, what's happening here? We have a double bottom chart pattern, a validation of a support level. So, this level around the level of 16,000, it's a valid support level until it will be confirmed as a valid support level if we go above what? The nuts. This is the nut here. It's the nut of my double bottom. And that's where the price is now. So today, there's a high chance that Dow Jones can even gap up and be very, very bullish. And I'm now prepared to trade it. And I'm waiting for the market to open. I will not place any trade. I will not be the first person to buy I will let other people buy first. I will monitor what is happening. Then I will buy. That's how I buy. If I want to sell, I want a big market player to sell first. I see them, they sell. I wait. Then I sell with them. I don't want to be the first person to sell. So I will not just come in now and buy because I'm expecting to go up. And if I'm wrong, you go down, okay? So be bullish and bearish together, all right? But if they are going down, I will not sell it because I don't want to sell to them. I will just go away. I will not sell. I will just watch them sell it, all right? But because I don't want to sell today, okay? All right, it makes sense? So apart from these two candles that we analyzed together, we have also a validation of support level here, and the price is on the edge of the nut. So this exercise is about validating my trading setup, analyzing whether this makes sense or not, all right? Now, we can go also to the higher time frame, weekly chart, monthly chart to validate our trading setup. But I don't want the video to be too long, so I'm not going to go into that exercise in this video because we want to stay focused on the moving average crossovers, which we will discuss as soon as the market is open. But the point you have to understand at this stage is that moving average 50 is below the moving average 200. Should one buy or should one sell? Generally, most traders will be expecting to sell, okay, the Dow Jones, but the reason why they want to sell by all means is because they are trading the moving average crossovers instead of trading the price. Though the moving average 50 is below the moving average 200, if the price gives us a direct signal today, we will buy instead of selling, because we are not trading the moving averages, crossovers. We are trading the price itself, the number one indicators. Looking at the price itself, what has happened here compared to what has happened yesterday, it is looking more bullish than bearish. Comparing the low and the other low is becoming more bullish, okay, than bearish. Though the moving average 50 is still below the moving average 200. It start making sense a bit? Okay, now what I will do, because the market will open in the time in London is now 7 minutes past 2 p.m. All right, and all right, in New York it's now 8 minutes past 9. Okay, you see now? Okay, so this is it. So now I explained to you my setup, the reason why I validate my setup as bullish trade setup. All right, you see now? So now what I will do now at this point in time, we'll pause the video because the market is not yet open. It will be open now in exactly 22 minutes. So when the market is open, I'll come back again and then we start trading. We have a trading setup now, okay? Makes sense? What I'm going to do today, because the market is likely to go very fast, I will not use 3 time frames, okay? All right. I'm going to go straight away to the 5-minute time frame. Okay? When the market is open, you see that's my red line on the daily chart. 1, 6, 7, 8, 9, I'll give priority to bullish signal above. So when the market is open, I'm coming here. You can see that on my 5-minute time frame, the moving average 50 is above the moving average 200. All right? But my setup is on a daily chart, and I'm going to combine the daily chart and the 5-minute chart straight away because I'm at a key level, okay? I can do that at a key level. I don't need another 3rd time frame. I'm not saying that one should use only 2 time frame. One can use 3 time frame. The minimum time frame that one should use when one is using a top-down trading method is at least 2. For this demonstration, I'll use the daily chart and the 5-minute time frame. It makes sense? So let's pause the video and we will come back to it. It's nearly 20 minutes I've been talking to you now. So when the market is open, we'll come back to it in 22 minutes and then we start day trading. All right? It's going to be very, very interesting. And there's a high chance that Dow Jones may gap up today. But one thing, okay, I'm expecting is that if the bullish momentum starts today, it'll be quite fast, okay? We'll see. If I'm wrong, I will not fight it. Okay? So we change time frame. We are the 5-minute time frame. I will draw again my channel. We have a consolidation here. All right, so you see here, there's a consolidation here. All right. we will see. I won't say anything anymore. Let's pause it and wait for New York to open. Speak to you soon. Pausing the video for the first time. Okay, traders, the market is now open. New York is now open. All right, as you can see, this is the first candle here. All right, so I'm going to wait and see whether they will give me an entry point. All right, so it's looking good so far because you can see we don't want to violate the market pattern on our entry time frame. I'm using 5 minutes as my entry time frame, and we have this consolidation, and this is a breakout taking place here. And looking on our left hand side, you see that this resistance is now taken out. So we want to see during the first 30 minutes how the market will react. Why is it so important? All right. It's important because if the market is open, all right, there are orders that brokers must fill, computers, high frequency traders, all these orders that are already in place, all right, the market will fill them. Once these orders are filled, then trading will begin. But sometimes traders, if you rush into the market sometime, the market may behave a bit funny, and usually a lot of traders are taken out of their trade within the first 30 minutes. So I think it is a little bit wise, or it is wise in fact, to be a little bit patient, wait for the first 30-minute candle to close first before looking for an opportunity to enter the trade. All right, now sometimes myself, I do enter the trade, all right, after 15 minutes, but the best approach is to wait for 30 minutes before, looking for an opportunity to enter the trade, okay? So this is the first candlestick bar. As New York is open now, we're on a 5-minute time frame, and we want to see how the price will behave, all right? So now I will not buy it straight away like this. I'm not saying that it is impossible to buy this, because some market participant will buy straight away because there are orders here to buy. You see the consolidation here? There are some orders here to buy. Some bullish traders will automatically place orders here to buy. Limit orders will be filled. All right? But I notice that traders that are more patient usually, win the day, all right? So they will wait, and I want to wait also a little bit more so I can see the behavior of the price, what the price is doing here. So you remember what we talked about before, all right? The place, the time, and what is happening, all right? The place, the time, and what is happening now. So what am I waiting for now? I'm waiting for the price to reveal to me what it is about to do. Okay, we have one information now. It breaks out of the consolidation pattern on the 5-minute time frame. We know that the level of 16689 is a very important key level, and we want to give priority to bullish signal above. So it's looking good so far that we are above the consolidation zone. I will be a little bit more patient before I can enter this trade. All right. So to allow the price to do what the price wants to do, so to speak, all right, we will pause the video again. All right, we'll pause it again, and I will come back to it when I see that something is taking place here, when it is becoming clearer to me, the message that the price is trying to communicate to me. All right, it makes sense. All right, so let's pause it because we don't want the video to be too long, otherwise we're going to have like 4 hours video recording. We don't want that. So I'll put a vertical line where I'm pausing my video, color it in turquoise, as I always do for this live recording. A lot of traders do not like it when we pause the video. But I hope you understand. If you have any comment about that, put in the comment section. But I think it makes sense because now, so far, you can see that we have been talking now 25 minutes, right? So if you want to show everything, we may have a video that is long, like 3 hours or at least 2 hours. We don't want that, okay? We don't want it to be too long, all right? So here we are. So let's pause the video and we'll come back and show you what the price doing. And I will leave this vertical line on the chart. And the time now in London, you can see it's 34 minutes past 2 p.m. And in New York, 34 minutes past 9 a.m. Okay, in Australia, okay, is exactly 12:34 p.m. All right. Okay, it makes sense. So let's pause the video for the first time, and then we will come back to it. And sometime what usually take place, you can see, because I told you that the price will run very fast. It may not give me another chance to enter the trade. We will see. It can happen, which will the price will just go up, 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 up. While I'm waiting for a little bit of pullback. It happens sometime, all right? When Dow Jones will open and it just run away, okay? But I will be patient and observe what is taking place here, and we will take it from there, okay? So let's pause the video and we'll come back to it. If you do not like me to pause the live video like this and you want it to be long, like 4 hours, okay, put in the comment section, all right? But I don't think it's a good thing, okay, to let it run forever, okay? Because we don't know when we'll have an opportunity to buy or sell. So we will allow the price, okay, to move fast and to show us its harms, okay? Once we know exactly what is taking place, we can come back and make a decision and continue with our recording about how to day trade using moving averages called surveys like a professional trader, okay? So pausing the video for the first time. The time in London, 35 minutes past 2 p.m. In New York, 35 minutes past 9. Speak to you soon. Okay, traders, this is what's happening now. Now you can see that the time in London is 46 minutes past 2 p.m. Okay, New York, 47 minutes past 9 a.m. And what is happening here, my friend? As I explained to you, where there are orders, that's where the price will go. As I explained to you on the 5-minute chart, orders were piled here to buy, okay, the Dow Jones. These orders are now filled. So because all the orders here, the big orders, are filled now to buy Dow Jones. These are the first buyers, okay? All right, pay attention. So look, the market, Dow Jones went up more than at least 100 pips. So it opens, you can see it opens here, okay, at 168, okay. What are we, this one now? Yeah. 1 second, please. All right, right here, 168.05. All right, that's the opening price today. 168.05. It went up. The highest we have so far is 169.27. Okay, 169.67. No, in fact, it's 169.34. That's the highest we have achieved so far. So you can see that from 168.05 we went to 169. Okay, 34. And this is more than 100 pips so far. Now, traders that bought it straight away here or somewhere above the consolidation, all right, will be prepared to take some profit. So the market's open now. See how many can 1, 2, 3, 4. It's now 20 minutes past so far. 20 minutes. So in 20 minutes, those who bought it have achieved more than 100 pips. So these are day traders. Will take some profit, all right? They are day traders. They will take some profit, okay? So that's why you see some red candle here. You see the tail. These are the first profit taking. Now everybody sees that Dow Jones is going up. new traders will come in as they see Dow Jones going up like this. They will try to buy straight away. Okay, but the best approach, price going up fast, as you can see here, is better to wait for a pullback. Sometimes the pullback does not happen, and it becomes difficult for traders, for day traders, to enter the trade. But there is a way to enter a fast running, okay, price like this. For this demonstration, for this video, for the purpose of this video, talking about how to day trade using moving averages, crossovers like a pro, I will wait for a pullback, okay, a pullback, preferably even down to this inside the consolidation. That will make more sense. If it come even inside it, that will be a reasonable entry for me. If it did below, it went back inside the consolidation and turn around, as soon as a candle close above the consolidation here, I will buy it straight away. All right? Or if the price forms, okay, forms a higher low above the consolidation, I will look for opportunity to enter the trade also. All right? But the best scenario is for it, which I doubt it, to come back all the way inside the consolidation. I doubt it that he will do that today. All right? And then to turn around. We will see. But I will wait. Okay, I'll wait more. Okay, now we see that, okay, the bullish market participants are dominating the first 30 minutes of the market, okay? It's a good sign. And also above, okay, the consolidation on the 5-minute time frame. This is happening around a key level. Which one? Okay, you remember the beginning of this video? 16789. Okay? So around that zone on the 5-minute chart, we see that the market has acknowledged that level of 16789. That's why the price was consolidating here. Now we see a breakout, and the orders that we feel here are bullish orders. No question about it. You can see that's why it's going up. I'm waiting for my entry, a low risk entry point. I want to be a little bit patient, but as I explained to you sometime, it may take a bit longer before we can enter the trade. That's why we have to pause the video from time to time to avoid that the video is too long, okay? Because I don't want to sell Dow Jones, okay? Even if I receive a sell signal, I will not take it. I will be patient until I receive a bullish signal, okay? All right, so I will pause the video again for the second time because we have been talking now for nearly 33 minutes. So let's pause it and see whether I will be given an opportunity to buy the Dow Jones Index. As I also showed you before at the beginning of this video, on a 5-minute time frame, the moving average 50 is above the moving average 200, but on a daily chart, we see a bearish moving average crossovers. Generally, a lot of traders, swing traders, position traders, will sell Dow Jones and forget about it. The mistake that they are making, they are trading the technical indicators instead of waiting for a direct signal. All right? A direct signal to sell. In my view, all right, Dow Jones has a high chance to go all the way to the green line here. You see the green line that are drawn here. Traders that understand Elliott wave, we have what we call an expanding triangle being developing here. So the minimum target for this day is somewhere in the zone of 10742. But slowly but gradually, there's a high chance that Dow Jones will seek the green line here before coming down again for if it reaches this level, it has a high chance to come back down all the way to another green line. You see the green line here? All the way near that green line here. Let me show you. This green line that I draw here, all right? If it went up all the way, okay, to retest the green line here, so a few days, probably this week will be a bullish week, bringing the price somewhere near this green line here. And then slowly we see again start going down again to retest this green line, even near the level of 15551. You remember that level? 15551? Okay. That's the level the Dow Jones will try to retest. But before that, we have this green line here. It makes sense? So let's go back again to my 5-minute time frame. All right. In few minutes, we'll have the first 30-minute candle. And we'll see whether I have a chance, okay, to enter the trade, or should I wait more, okay? So pausing the video again for the second time, and then we will come back to it to see whether, where, and when I will enter the trade. So far, it's looking bullish, as we have seen, the validation of my trading setup, how I analyze the setup, and why I decided to buy, and where I want to buy. I want to buy above the level of 167.89, preferably above this consolidation on the 5-minute chart. Talking about how to day trade using moving averages, crossovers like a pole. I'm using here the moving average 50, the red line, and the moving average 200. Okay, so pausing the video for a second time, and then we will come back to it very shortly. Speak to you soon. Let's continue with our recording. Okay, so we pause the video here, and this is what the price is doing so far, where I placed my vertical line. That's where we pause the video. Now the first 30-minute candle is now closed. All right, okay, so this is our first 30-minute candle, very bullish candlestick bar right here. As I explained to you, the market is very, very bullish today. We'll see whether we're going to have a bit of pullback, okay, so we can also enter the trade, all right? Now, I may, okay, so this is the high. I'm going to place the line at the high of the 30-minute candlestick bar, okay, like this. But I want to go back to the 5-minute time frame again. So let's color the high of the 30-minute candle into orange, okay? All right, I can buy above that high, but I'll prefer to buy somewhere below here. But I want to show you something on the 5-minute time frame, okay? Stay with me. So during the first 30 minutes, the price went up all the way here, up to 169, okay? 169.45, okay? 169.45, all right? Now this is the second, we are now in the second, okay, 30-minute candle now. So I would prefer, okay, I'm going to use a Fibonacci retracement. As I explained to you, the market is very bullish today, and I'm going to use Fibonacci retracement. I would prefer to buy, like I show you, somewhere if it D below, okay, the top of the consolidation, that would be very nice, D below and come out, that would be better place. Or the price form a higher low above the consolidation. You see the consolidation on the 5-minute time frame. So we will see whether they will bring it back down, okay? And if they start bringing it down, I want to buy somewhere between the 50% Fibonacci retracement level and the 61.8% Fibonacci retracement level of the first 30-minute candle. If I receive a signal here to buy, I will buy, or preferably the price should go back inside, okay, the consolidation zone. So I can buy, first scenario, if it come back down all the way inside the consolidation zone, which I doubt it now because it's quite strong now, or it pull back between the zone of 50% and the 61.8% Fibonacci retracement level of the first 30-minute candle. But if the market is too bullish, as we are seeing now, or if it's too bullish, and it continues to go up above the high of my first 30-minute, which means start going up, I need to wait again more. In that case, I will not buy it like this, like some trader will do, buy straight away here, which is a bit risky. I won't buy straight away here, expecting it to go up. This is just an expectation. But if it continue, repeat, if it continue to go up above the high of the first 30-minute candle, I will be happier if they bring it up more and then pull back to retest the high, of the 30-minute candle and give me a clear-cut signal somewhere here. So I can look for opportunity to buy if you pull back nicely inside the consolidation and turn around, as I explained to you, or if I receive a signal near the 50% and 61.8% Fibonacci transfer level. But if the bullish momentum is too strong and they continue to push it up above the high of the first 30 minutes, I will expect them to pull it back to give me a higher low, okay, or the retest of the high of the first 30-minute candle. All right? So because we are talking now, it's nearly 40 minutes, it's now 40 minutes exactly we are talking so far. I will pause the video again for the third time, and then we will come back to it and see what the price will do. What I will do, I will wait until it's time for me to enter the trade, and then we start recording again to avoid that the video is too long, okay? All right? This video is about how to day trade using moving averages crossover. Let's get pro. We are using a moving average 50 and a moving average, 200, all right? The setup was on a daily chart. I'm using, the 5-minute time frame as my signal time frame and also as my entry time frame, all right? But the key point you have to understand, talking about a top-down trading method, the minimum time frames that we can use, is 2, all right? So I'm using daily chart for trading setup, 5 minutes for the signal, and again, 5 minutes for the entry, all right? It makes sense? Okay, if you have any question, do not hesitate to contact us if you are TST trader, all right, and we will get back to you, all right? If you have any comment, put in the comment section. So pausing the video again for the third time, and then we will come back to it very shortly to see whether I have been given an opportunity to enter, my bullish trade, all right? We will see, okay? I'm looking for a low risk entry point, and it's not yet in place, so I will wait, all right? I will wait and see whether they will give me that opportunity. And if they give me that opportunity, I will place the trade, and I will let it run beautifully, okay? All right? So before we go, the time in London is 6 minutes past 3, PM in London, all right? In New York is 6 minutes past 10 AM, all right? And in Australia, 6 minutes past 1. No. I'm saying something else, 6 minutes past 1 AM in the morning, That's 10 hours different between Australia and London, okay? All right? So 3 minutes past, it's now 7 minutes past 3 PM in London, In New York, it's 7 minutes past 10 AM. In Australia, it's 7 minutes past 1 AM, all right? The reason why I'm saying Australia is because we have Australia traders also, so. All right, so let's pause it now, and put it here in vertical line, And I will come back to it and see what the price is doing, There's a high chance, that it will come back down again because day trader will take profit, All right, so you enter the trade, you went up, more than 100 pips. You are day trading, you will take day trader will take some profit, and hopefully it will give us another chance to enter the trade. All right, so pausing the video for the third time. Speak to you soon. Let's continue, traders. So we pause the video here. As you can see, my vertical line was here, and since then you can see that as we were expecting, the price went back down inside the horizontal channel. You see the horizontal channel we are looking at before. If I extend this line, you can see that it went back inside. All right, it's good to wait, So all these gains has been lost if you are a day trader and you don't know how to take profit. So you see, so now the price went back inside, the channel, and now it's still consolidating within the channel. Amazing, Now, what I said to you before is that I will buy straight away. If you went back inside, and close above it just here, all right? So when the price was here, what should have happened here? You see you see here, it was turning around here, but you see that it didn't come out. Okay, this candle here, if it did close above, okay, the consolidation session, which means turn around and come out closed somewhere here, I would have bought it straight away, but it did not. You can see that as it went back inside the channel, it was turning around nicely, but here it didn't come out of the channel. Okay, it has to come and close a little bit just here on top of it here. Then I would have bought it, but it did not. Okay, so it just went back again. So as it hit this level, which is the top of the consolidation, okay, it found a resistance again and tried to bring it down. So we are here now. So talking about my entry, I'm going to remove some of the line I've drawn here before, and the time is almost gone because this is not a good time to day trade, because the time now is 34 minutes past 5 p.m. in London. London is now closed, but New York is still open. But I'm going to give a chance to this trade, but I know that there is a little bit of risk in this trade because London is now closed. Normally, when New York is open, all right, the best time for day trading is the first 2 hours. But as you can see, that first 2 hours are gone, and I couldn't enter the trade. So we are now in what we call the gap period, okay? So, but I want to give a chance to this trade, but I'm not yet in this trade. I'm still waiting, but hopefully they will allow me to buy now, okay? So where I'm going to buy, okay, it's coming up now. So if the price closes above this, you see this candle here, this one here. It closes above that candle. If this candle closes above it and stay above it, I'll buy straight away, okay? So let's see whether they're going to do that now. Let's zoom into it a little bit more, okay? So if the, you see here, the tenor here is coming up now. If it close above, I'll buy straight away, okay? So let's see, I'm on the 5-minute time frame. As I explained to you, I'm using a 5-minute time frame for my signal and for my entry, all right, straight away. You see here, it's coming back down a bit, okay? Watch this line here. Color it now into green. You can see the green line there. So if it close, if this candle here went back and close above, okay, the green line, I'll buy straight away, okay? All right. Now you may be wondering why I'm buying straight away, because you can see that as the price went down, okay, it displayed a higher low here. You see this higher low here on my on this 5 meter. You see there was this low here, followed by this higher low. Okay, all right. So the price is here again in the same zone like this at the first higher low. All right. Those who bought it here, if the price close above this line straight away, I'll buy, because they are buying again. As I explained to you, when we are about to enter the trade, we want to know, okay, where we want to buy, okay. We want to check the time of the day. As I explained to you, this is not the best time for day trading. Okay, I'm aware of it. I know the risk, but I want to give it a chance if they allow me to enter the trade, okay? The time, the place, okay, and what is happening now on the entry time frame. So on the next entry time frame, it has a higher low here. This higher low is bullish, okay? So if the price close above the higher low, we see here this line, it's above the higher low. So there was a low, a higher low. If the price close above the higher low, I want to buy, okay? I want to buy. It's very simple, okay? Language of the price, a low, a higher low, price went up before. Now it went back below the higher low. If it went back again and closed above the higher low, I'll buy straight away, okay? Because people are buying here. So for one reason, when the price dip below this higher low again. But if they bring it back again, I'll buy. It means that they are buying again. So I want to buy them. I want to buy together with these people here. Remember what I said? I don't want to be the first person to buy, and I don't want to be the first person to sell. So I want to see some people buying first, then I want to buy together with these people. That's what I'm doing here for my entry. So here, the price was going down, displaying higher lows and higher. In fact, I could have sold Dow Jones here because this is a beautiful sell. Beautiful sell. Okay, very nice, beautiful sell. And you can expect that because price went too fast. Okay, as the market opened, fill these orders. Now it bring it back down. Okay, day trader took their profit. Price returned back inside the channel. So if you are rushing, you see this candle here, how it went above it. That's why I say to you, you have to allow it to run away from the high of the first 30 minutes candle. You see, it didn't go far away. So if you were thinking that you're going to miss an opportunity, you buy here like this, and now you see you'll be losing trade. All right, very, very important to be patient. Okay, so know how you want to eat that. So this was the high of the first 30 minute candle. Let's go back to the 30 minute time frame. You see the orange line here. You see, my drawing was I wanted to go away from it first and then come back and retest it. Okay, all right. We switch back again to the 5 minutes. You can see that it started going away, but quickly change direction. I'm not in it at all. I'm not going to buy here. You see, so read the price, see what's happening. Okay, the time, the place, and what is happening. You see here again, it's not yet, it didn't close. This candle did not close above this higher low. All right, a higher low is a bullish zone. Okay, so now we are now below it. So I'm still waiting. Okay, you see, to enter the trend, and the time, talking about the time, it's not the best time for day trading, but I want to give it a chance if it closes above this one. Okay, in that case, if I enter this trend, because I know that the time is not suitable for day trading, I will not use my normal 30 minutes stop loss. I'll try to use a little bit less stop loss. Okay, so I'll wait when I'm about to enter the trend. I will show you where I will place my stop loss. Okay, let's continue this discussion. Okay, so the purpose of the video talking about moving average crossovers. Okay, what I want to explain to traders, that so you see that we see moving average. Keep eyes on the price because I want if it close above it. Okay, all right. Moving average 50 was below the moving average 200. Okay, as I showed you before, it is bearish on a daily chart. Most traders want to sell. They want to sell, okay, because they see a bearish crossover, a bearish moving average crossover. You see, it went back above it now. But I will not, pay attention, I will not buy straight away like this. This candle here on a 5 minute time frame must close. All right, so once a new candle start moving, okay, I will buy straight away. Okay, so now it went back above my green line. I will not just buy now like this because this candle must close. Sometimes traders think that, oh, I'm going to miss opportunities. It went back above it. No. Don't wait for the candle to close. It must close. Be patient. See, we have been waiting since the market is open, and the time now is 17:42 in London. Okay, so long time. Okay, long waiting time. Okay, more than 2 hours waiting time. Okay, so once this candle is closed, I'll buy. Okay, so talking about the moving average crossover, keep your eyes here when I'm talking about. Okay, so we have a bearish moving average crossover 50 below the 200, and majority of traders would like to sell. But the mistake that traders are making when they are using moving average crossovers is that they are trading the moving averages instead of the price. All right, so because the moving average 50 was below the moving average 200 is a bearish warning. Okay, it's a bearish warning. Now the price must give us what we call a direct signal. Okay, if we have the bearish warning given, okay, now I'm in this trade. Okay, here we are. Dow is time, okay, buying Dow Jones at 16826. Okay, let's move my green line there. Okay, I'll draw another line there. Once, okay, 26. Okay, here, right there. 16826. Let's see my stop loss. Let's see where I can place it nicely. 26. 26. Okay. Normally, I should place it below this candle here. You see this candle here? That brought the price up. And the best place to place is to place my stop loss here. All right. But because of the time of the day, I'm a bit reluctant to use my regular 30 pips stop loss. Okay. So I'm already in this trade at 16826. Going to call out that line in orange. Okay, on 5-minute time frame. And I want to change time frame. You know, I'm on the 5-minute time frame now. I'll go to the 3-minute time frame because I want to use less stop loss. This candle is quite tall, okay? So I'm still in this trade, and I will decide soon where to place my stop loss. Now, okay, let's see here. I want to use less than 30 pip, and I will be happy about that, okay? Okay, here. Two six. Storm. It's not looking good for me now. Okay. Because I want to see where I can hide my stop loss. What I will do, I will go with the 30 pip because I don't want to leave it. So 30 pip, I'll use 30 pip, okay? All right? I'll use 30 pip. It's a bit of risk because normally I should use less. But looking at the candlestick bar here, okay, it's better to place it below this candlestick bar here, okay? So I'll put it at 98. 96, yeah. 96. Hold on, please. That's my stop loss there. I'll color it there into red. That's because I want to be below this candlestick bar. I was thinking to use less stop loss, but if I bring it up, I don't want to be above, okay, this level here. So I'm happy with to stay where I am now. You see here, all right. But I will not move this stop loss. I will leave it as it is. If they take me out, they take me out, okay. So 30 pip, okay? 30 pip, okay? Couldn't find better stop. If I don't want to put it here, you see? I don't want to put it here. It's not good, okay? So I leave it here at 16796. And that's a 30 pip between my entry here. And that's my 30 pip stop loss. All right? Okay. So now I'm in this trade. As I explained to you, if you go back to the daily chart, okay. A lot of traders, you see the price was on the edge of the moving average at 50. And I know that a lot of traders today will attempt to sell Dow Jones. It's a big mistake, okay? It's a very, very big mistake because they are assuming that because we have a bearish warning, one should sell anyhow. It does not matter whether you're on a 5-minute, 10-minute, hourly chart, moving average crossovers, are warning, one must now wait for the price to give a direct signal. Looking at the price alone here, in fact, we have on a daily chart here, what we call an expanding triangle being formed here. And you see what the price likely to do, as I explained to you. Is this why for traders who understand area wave is okay, A, B, C, D, okay? All right. And the price going now to this point here to form the E, okay? A, B, C, okay, D, E, all right? When the price reaches this level, then it will continue to go down all the way to the level of 155.51. Okay, it will come first to the second green line, but my expectation is that it goes all the way to 155.51. That remains to be seen, but the first target for the bearish trade, that if you receive a signal, a sell signal on the edge of this green line here, and we sell, the normal target is this green line here. Okay, you have to see how I draw my second green line. It's not straightforward. Okay, expanding channel is a little bit messy here. Okay, a little bit messy. Okay. Okay, so the point I'm making here is that with the moving average crossover, we receive a warning. We must wait for, all right, a direct signal. On a daily chart, though we have a bearish warning moving at 50 below the moving average 200, after this low, the price did not display a new lower low, telling us that the bearish momentum or the bearish sentiment or the bearish warning is diminishing, price from a double bottom. In fact, now the price is on the edge of the knot of our double bottom pattern. It is bullish than bearish until we start going back down again. It makes sense? Going back again to the 5-minute time frame to see whether I'm still in this trade. Okay, we are still in this trade. You can see it's coming down. So I enter here, and now the change direction coming down. I'm under pressure. Okay. All right, you see now, day trading. You see. So the opposite is also true. Talking about moving average crossovers. Suppose the moving average 50, okay, goes above the moving average. Keep eyes on the price though. Goes above the moving average 200, okay. All right. What usually goes to the mind of trader? Trader will say that, okay, this is a bullish signal. Now, I don't call it bullish signal. It's a bullish warning, moving average 50 above 200, or any moving average, any faster moving average going above a slower moving average is a bullish warning. It's not a bullish signal. All right. Now, if it's a valid warning, a valid bullish warning, the price will confirm it. All right. The price will confirm it. So instead of focusing on the moving average crossovers, after the moving average crossovers, after the warning, trader must now concentrate on the price. So you want to concentrate on the price and see what the price is doing. Okay, this is what we are talking about. Okay, the time, the place, okay, and what is happening there. Okay, all right. Apart from the price, the moving averages are powerful trading tool if traders understand how to use them. A faster moving average going above, okay, a slower moving average is a bullish warning. Okay, so here you see it's coming very close. I'm going to be out of this trade soon because you see I enter here and it changes direction. Only a few pips for my stop loss. But as I explained to you, for this trade, I will not move my stop loss at all. I prefer to be taken out, and then I will re-examine, okay, what has happened, okay? So when we receive a warning, we must wait for the price to confirm it, okay? A bullish warning is not a bullish signal. A bullish moving average crossover is not a bullish signal. Okay? a bearish moving average crossover is not a bearish signal. There are two types of moving average crossovers. Sometimes we have what we call, a fast moving average crossovers, So when we have a fast moving average crossovers, is when you have a fast bullish moving average crossovers. Repeat, when we have a fast bullish moving average crossovers, all right, one should not buy straight away. One should wait for the price to pull back. Now, I'm saying something very, very new, but I'm just going to say it here, but I'm not going to go deeper into it. But I will say it again. When we have, a fast moving average crossovers, one should not buy straight away. One should wait for the price to pull back. Because very often, I want to give you one example of a fast moving average crossovers. A typical fast moving average crossover is moving average 20 going above the moving average 50. That's a fast bullish moving average crossovers. Now there are other fast moving average crossovers that I do not want to share with the public. I want to keep it for myself. But I'll give you this example now. Moving average 20 crossing above moving average 50. Very often the price will run very, very fast up. The price will be up there. So if you buy straight away after a fast bullish moving average crossovers, for example 20 going above 50, and you buy because of the crossover, you are likely to lose because the price will pull back. In fact, one should sell straight away. Most of the time, one should sell straight away using a top-down trading method. One should sell straight away when one have a fast bullish moving average crossovers. The opposite is also true when we have a bearish fast moving average crossovers. One example is moving average 20 going below the moving average 50 is a fast moving average crossovers. It's a fast bearish moving average crossover. When the 20 goes below 50, one should not sell straight away. One should wait for the price to rally back, to the moving average 50 before one can use a top-down trading method to sell straight away. So that's why sometimes traders get into trouble because they are using moving averages, but they are trading, the moving averages instead of the price, All right? You see how the price came very, very close to my stop loss, this one here, you see here? So I enter here, and I did that near my stop loss. And this is why I said you see this candle here, this is my protection here, what I was showing to you here. I'm still on it. I'm telling you, when I change my time frame, yes, we did change my time frame to 3 minutes, you remember? When I was looking for my entry, you see that I was telling you about this candle here, this one and this one, All right, this doji and this bullish one. So if I was using less than 30 minutes, 30 pip, as I wanted to because of the time of the day, I will be somewhere up here and I will be taken out, I will have been taken out if I place my stop loss less than 30 pip. They will have taken me out already. But what I did is because of this, you see this hammer, doji and this bullish candle, I prefer to place my stop loss below it instead of having it above it. What the price did, the price went back above, you see here, above that this candle here. I'm here. It came all the way there, you see here? Pay attention to the horizontal line. All right? So that's why I have a bit of protection here because some trader bought it here. All right. So it gives me a bit of protection. So far, I'm still in this trend. Okay. But as I explained to you, the time for day trading is not very, very good. So it looks like I missed the party and I'm joining it and I'm under pressure. I'm under pressure because of the time of the day. Okay. The time, the place, okay, and what is happening now. Okay. It makes sense? You see, I will press it back again. I'm under pressure, okay? All right, let's see how long we have been recording this video. It's now 1 hour 10 minutes so far, okay? And I'm now in this trade. I enter at 16826. I know that it was not a best time for day trading. It's not the best time, okay, to day trade. But I decided to take the trade. And I enter at 16826 using 30 pips stop loss. Initially, I was thinking to use less than 30 pips, but switching my time frame from 5 minutes to 3 minutes, I noticed that it's better to use the 30 pips instead of less than 30 pips. I've been talking to you now for 1 hour 10 minutes, explaining to you how I enter the trade and also highlighting, okay, moving average crossovers, okay, trading mistakes. I'm now talking about the fast moving average crossovers. One example is the moving average 20 and 50 crossovers. It's a fast moving average crossovers. There is another type of moving average crossovers that we call the slow moving average crossovers. Now, when we have a bullish slow moving average crossovers, okay, one should enter the trade straight away. One should buy straight away. So what I'm saying here is that a slow bullish moving average crossover is a bullish trade setup. Okay? But a fast bullish moving average crossover is a bearish trade. It's a bearish trading setup because the price will pull back first before going up if we have a fast moving average crossovers. So therefore, we can scan. So if you are looking for bearish trade setup, you can use moving average 20 crossing above the moving average 50, which is a bullish crossover. But what you are doing, you are selecting bearish financial instrument. You are looking for bearish financial instrument because a fast moving average crossover, it is a bearish trade setup or in a short term because it's only bearish for a while, okay? But we want to use that as a bearish trade setup. So the price will pull back first before going up. Now, in fact, I need to reveal to traders that I'm writing a book about moving averages high right now because I have too many secrets when it comes to moving average trading, okay? So this information, please do not ask me to reveal it to you because I will say definitely no. Don't ask me anything more about the moving average secret because they are my own secret and I will not share it with the public for free, okay? All right. But what I'm saying here, I will say it, okay? Another type of moving average crossover that we have is a slow moving average crossover. In that case, when we have a bullish, okay, a bullish slow moving average crossover, it is straight away a bullish trade setup. Now you understand. So the slow bullish moving average crossover is the opposite of a bearish fast moving average crossovers, okay? But I will not also give any example in this tutorial about the slow, okay, moving average crossovers. I will not give any example. I will just talk about it, okay? You understand, okay? On the other hand, if we have a bearish slow moving average crossover, it is straight away. Now here, I'm out of this trade now. You see now, they take me out this trade, okay? You see here? Taking out, you see, losing trade, okay? 30 pip. Now, okay, you see now? So I'm aware of the risk, as I show you in this trade. I'm aware of the risk. The time of the day is not suitable. I decided to enter the trade, and I know that the risk is high. Now I'm out of take me out of this trade. You see, this is a losing trade, okay? All right. What I will do now, I will wait again. And if now I will set another entry point. So this time I will place another line here, okay? So this is very, very important and also a good example because of the time of the day. The best time for day trading is the first 2 hours when the market is open. So it is a risky time here for day trading, and you can see I'm taking out of this trade. So I will, what I'm doing now, if this candle now close again above, okay, I'm drawing a new green line, pay attention. So they take me off first time, I'm looking for another entry, okay, because I want to buy again, okay, I want to buy the Dow Jones again, all right. So after this candle is closed, above this green line, it's not yet closed, I will buy again Dow Jones, and I will see where to place my stop loss. So I'm out of the first trade, they take me out. So I want to buy again somewhere near this, okay, now this candle is closed. Okay, I want to buy Dow Jones now at 16816, okay? This one here. Okay, I need to move my entry again. 16816, where are we? That's it, right there. So that's my entry, okay? So it's orange. So let's see, 16816. 16816. Okay, let's see below. I'll use hold on please. I want to place my stop loss right here so you can see 951615. I want to use 25 pip for this, okay? 25 pip. Okay. I think it's reasonable. In fact, I can use less. I use 21 pips for this trade. So my stop loss will be at 167.95. I'll use 21 pips, okay? 21 pip at 167.95. So moving my stop loss. That's my stop loss. Right below this candle, you see the tail of this candle, I'll use 21 pips, okay, for this trade, okay? All right, so first time they take me out of the trade, was a losing trade, re-enter at 16816, using 21 pip this time, reasonable, at stop loss 167.95, okay? Now let's continue with my discussion. So sometimes one can be taken out of a trade. As you can see, the time of the day is not suitable, and I'm taking out of the first trade. But sometimes another opportunity is given to traders, and one can re-enter the trade. It happens. You enter a trade, you are taken out. Another opportunity is given. Don't get emotional. You re-enter the trade again, and then the second trade may be profitable. All right. All right. Sometimes even one can enter the trade. You are taken out. Okay, you come out, you re-examine everything, especially if the setup is very, very good. If the setup is very, very good. But what I'm doing here is because I'm recording a video, I want to show trader how to enter a trade, how to manage a day trade. I'm talking about moving up a crossovers, and I re-enter this trade. But because normally this time, okay, because we were waiting too long, okay, I have two options. So I was waiting to buy until we get into the gap period. So the safest way is to stop trading because this is not the best time for day trading. So you decide not to trade at all, okay? The second option, you want to trade, you know the risk yourself, as I did now, that, okay, George, this is not the best time for day trading, but I decided to enter. In that case, you are controlling the risk and you know exactly what you are doing, okay? It's better to know what you are doing than not to know at all that this is not the best time for day trading. Because if they take me out for the second time, I will not push it. I will wait until the last hour when New York is about to close. It's another time when we can quickly day trade just 60 minutes left, okay, the last hour, we can try to trade again. Sometimes you may have a beautiful signal sometime, okay? But if, don't force it because you got only 60 minutes. So first 2 hours when New York is open, and the last hour, we can try to trade. So have two options, not to trade during the gap period, all right? But I decided to trade, and I know the risk, and I want to manage the risk. So I lost 30 pips, all right? Boom, gone, all right, in front of you here. I re-enter again here, okay, 16816. And here we are now. I'm already in profit, okay? Beautiful. So I will, now that I'm in this trade, what I will do, I will let it run, okay? I will let it run because the market is bullish today, okay? The price has a high chance to return back to, okay, this point. The only thing that is worrying me now is because, okay, we are not in the first 2 hours when market is open. But I want to give it a chance because sometimes the market will play like this. Very soon, we may see that everybody will see it here. A lot of traders are emotional, day traders, you see this session, who did not take their profit. So they have seen their profit being taken out. If they didn't take any profit, they were too greedy and they don't take profit. If you are day trading, take profit consistently because you are not a swing trader. Just take profit consistently. It was more than 100 pips, so people should take profit. So some day trader may stay around or whatever. If they don't use stop loss or manage the trade, they may give back more than 50% of their initial gain. They will be a little bit emotional. So they will be also waiting to re-enter the trade and get more profit out of the market, okay? All right, so this is it. And in order to control, so now you know what's happening here, okay? So I'm going to remove Sunline, okay? And by the way, thank you for watching because we have been talking nearly an hour now. Okay, I hope you find it very, okay, useful, okay? And most importantly, that you have learned something from it. And I will put it to use, okay, to make a better day trading decision when you are using moving average crossovers, okay? And also to improve your entries, okay? So we are now back above, okay, just on the edge of our horizontal channel that we have seen on the 5 minutes, you see here. So the market pattern, we went back inside the channel. You can see that where some trader may notice something, that George, why did you decide, okay, all right, to buy, okay, inside the channel? That would be a good question, okay? But I explained to you also before, this low and this higher low, all right? The price went above it, okay? That's why I placed my stop loss above, okay, the first higher low. And as the price closed above it, on the 5 minutes, now I'm on the 3 minute later, go back to the 5 minute, okay? This is now 5 minute time frame, okay? You see, after this higher low, I placed a line and I bought it there, okay? As you can see, it was a losing trade because this candle went too far, okay? Many people bought it, okay? It went too high. So I bought it up here, all right, you see? So it went too far, okay? So, and then it just pulled back to take me out fast, okay? All right? Because no, this candle is too tall, okay? It's a bit too tall, so they take me out. Now I re-enter here at 16816, okay? Pressing my stop loss at 16795. I'm using now 21 pips. Okay, so we will see whether this time I will get paid or not. The only challenge that I face is the time of the day. So remember the time, the place. The place is good, all right. What is happening is not too bad, but the time, okay, the time, the market environment is not the best. But we will see whether I'm going to get paid or not, okay. So remember to enter the trade, we are considering three things: the time, the place, okay, and what is happening. For this trade that I'm taking, the time is not the best time as such, but we want to give it a chance and see whether we're going to get paid. All right? So I'll wait for this candle to close first, this one here that is formed on the 5 minutes. Once it's closed, We will pause the video again for the fourth time. Is it fourth time now? Okay, fourth time. And we'll come back to it to avoid that the video is too long, okay? All right, so we are talking now an hour 24 minutes. Okay, it has been a long time. All right. So only serious day trader will watch this video, okay? All right, so this candle is now closed. This one here, I was telling you, is closed. It's now closed. So let's pause the video, and we will come back to it and see what's happening. Before we go, the time in London is 14 minutes past 6 p.m. In New York, 14 minutes past 1 p.m. Pausing the video for the fourth time, and we will come back to it very shortly. This video is about how to day trade using moving average crossovers like a pro. Speak to you soon. Pausing the video for the fourth time. Let's continue, traders. As you can see, we pause the video here, and then other traders try to sell it on the edge of the horizontal channel. You see the upper side of the horizontal channel, market pattern. Okay, they were trying to sell here, but it's not advisable to sell Dow Jones at this point in time. As I show you on a daily chart, there is a solid bullish trade setup here. Okay, so we can afford, okay, to sell Dow Jones. Let's say high shall you continue up, minimum 17042, ultimate target on the edge of this the upper side of this expanding triangle. Okay, when it reaches the edge of the expanding, the upper side of the expanding triangle, we'll look for opportunity to sell Dow Jones using a top-down trading method, allowing the price to come back down near the lower part of our expanding triangle. A better bearish target will be the level of 5551, as I told you already. Okay, all right. So first trade was not successful. I enter again, and it's working beautifully. Okay, let's go back again to the 5-minute time frame, and there's a high chance that the price will run fast into this session. I'm looking for, let's see, I didn't set my target, 168 to 66, minimum 50 pip out of this trade, because I lost 30 pip already. I want to be a little bit it's going up nicely, okay? All right, there are traders waiting to buy again Dow Jones, okay? So as the price return back inside what has happened here, I can explain it a little bit deeper. So beginning, we have orders above, okay, the horizontal channel, the 5-minute time frame. These orders were filled, okay, and day traders took profits. Prior return back inside the channel. The smart money want to buy now. These activities that we see here, you see here, these are buying activity. Though, okay, it went up, went down. The smart money now, it become clear to the smart traders that Dow Jones is going to go back up, okay? All right, now they know, you see here? So it looks like, you know why we talk to Elliott wave trader, we say when the first Elliott wave is canceled, we restart counting again. If the market is truly bullish, we'll have another new first Elliott wave, all right? So there is a high chance that this cancellation, so it went up, it canceled it, is likely to return back up again. But again, remember what we said about the entry, the time, the place, and what is happening now. So, because the market is very, very bullish, a lot of traders are still waiting to buy. That's why I decided to re-enter again for the second time. Otherwise, I would just walk away, okay? So, I will not be too greedy in this occasion because of the time of the day. So I will not wait until it reaches this level before I take my profit. The minimum that I want to take out of this trade is 50 pip. But when it reaches that 50 pip, which is in the zone of 16866, the price now 16864, so 2 pip from my minimum target. But I will allow the price to go up more. Okay, I will allow it to go up more, at least, up to 16880. That would be great. Okay, 16880 will be great. Then I will just come out because of the time of the day. Okay, okay, all right. So just to show you again what is happening here, and we'll pause the video again for the fifth time to avoid that the video is too long. But when it's time for me to exit the trend somewhere near this level, if it happen now, it would be great. Then we can stop the video to avoid that it's too long. We have been talking now an hour 30 minutes. Okay, so the sooner I take my profit, okay, then we can stop recording the video. Okay, so let's pause it again and we'll come back to it. Okay, the time in London is 35 minutes past 6 p.m. in New York, 35 minutes past 1 p.m. waiting to exit the trend somewhere near the level of 16880. All right, we'll see how it's playing. Okay, and we'll take it from there. Okay, I will be a little bit patient. Okay, so pause the video for the fifth time after recording an hour 31 minutes. Speak to you soon. Okay, traders, here we are. The price is now in the zone of 16880. We pause the video here. And, you know, that's a 64 pips. Very fast, okay? 64 pips for this trade. All right, what I will do now, I want to see how this candle will behave a little bit, okay? I want to give it more chance, okay? So I will let it run more, okay? I will let it run. And because the setup is quite strong, and the market is now a little bit emotional because a lot of day traders, okay, have given away some of their profits. So they would like to pay more. You see how the price come back down quickly. So I want to wait a little bit more, okay, and allow it to go up more, okay. I'll raise my target to 16890, okay. Top of this candle here will be great place, all right. 16890, okay. So what I will do now, I'll put a line there, 16890. That's it. That's my target. I'll color into pink to please the ladies. All right. So here we are. So that's my target. Okay. So I will give it more chance. Time in London now is 45 minutes past 6. In New York, 45 minutes past 1 p.m. So on the 7th of October 2015, recording a live video. As always, a live video may take longer than we are expecting. So I'll give it more chance, okay, to pay me more, all right? That will be great, okay? So if the price reaches this level of 16890, I will be out of the trade straight away, okay? All right, that will be great profit. Entry at 16816, exit 16890. Beautiful, isn't it? All right, 74 pips. All right, after 30 pip loss, 74 pips. That's not bad, okay? But the price should continue to go up more, and because if you go back to the daily chart, okay, let's go to the daily chart, and I want you to pay attention to this candle here, and the price should go up more, okay, should go up more and close strongly, okay, should close bullishly, strongly, all right? After this candle here, should be very, very bullish, all right? Should be very, very bullish close today. That's why I'm hanging around, waiting for a bigger pay, okay? All right? So here we are. We'll see how it goes. So let's pause it again, all right? And we'll come back to it. 46 minutes past 6 p.m., 46 minutes past 1 p.m. in New York. Pausing the video, how many times? Okay, fifth time or sixth time? Okay, fifth time. Let's say fifth time, okay? If I'm wrong, correct me, all right? Let's pause it again. That's it. Okay, traders, I'm out of this trade with 74 pips. It's not bad. Looking at the time of the day, I managed to cream, or so to speak, 74 pips out of this trade. In my view, the Dow Jones index will continue to go up to finish the day very bullishly. All right, you see the shadow on top of the daily chart now should be filled. The price should continue to go up. But for the purpose of this video, talking about a day trading, talking about how, okay, to day trade using moving averages, crossovers like a pro. I'm out of this trade now, and I'm happy with my trade, but the price should continue to go up. Okay, I don't want to be too greedy. If I want to remain in this trade longer, all right, what should you do? I will move my stop loss to this point. You see this low here. If I want to stay in the trade and get paid more, I'll move my stop loss to this low here to secure some of my gain, all right, to secure some of my gain and allow the price to continue to go up, all right. But because of the time of the day, I will not do that. I'll just close my trade now at, okay, 16890. With 74 pip. All right. To summarize this long video, this is what usually happens when we are recording a live video. We want to show traders, okay, a common day trading mistake that traders are making when they are using moving averages. Okay. The moving averages crossover give us warning. One must now pay attention to the price itself, the number one indicator, to confirm, okay, the warning. As you can see on the daily chart, we have a bearish moving average crossover. Specifically, moving average 50 was below the moving average 200 on the daily chart. Generally, a lot of traders will be bearish and will only sell. As you can see today, though the moving average 50 was below the moving average 200, the price itself, the number one indicator, has confirmed to us on a daily chart that the bearish momentum is diminishing. Therefore, we were looking for, okay, we have seen a bullish trend setup on here, the nut of this double bottom chart pattern. I now use a multiple time frame trading method. This time I was using only 2 times frame, the daily chart and a 5-minute time frame. All right. I also take this opportunity to show traders how to enter a day trade, talking about the most important thing that one must should be aware of when we are talking about entering a trade. We must consider first the time of the day. All right. The time of the day. Very, very important. What other trader is talking about the time of the day? Okay, what other traders are likely to do, okay, at this point in time, okay? What is happening in the market in general, okay, this time, okay? All right? We will also talk about the place. So the time, the place. The place is about where we want to enter the trade. We want to buy at the support level. We want to sell at resistance level. If we want to buy at the resistance level, the price must find a support above the resistance level. We want to sell at the support level, the price must find a resistance below the support level. All right. As you can see, the first trade was a losing trade, but okay, I re-entered the trade because of the time of the day. You can see the time of the day is so important when we're about to enter the trade. The first 2 hours and the last hour when New York is open, one can day trade, okay? But the time when I had an opportunity to enter the trade was not the best time for day trading. I knew the risk. I knew what to expect, okay, that the risk was high, that the market environment was not the best for entering the trade. However, because of the quality of the trade setup, I expecting Dow Jones to be bullish today. I re-entered the trade after losing 30 pip. I re-enter again, okay, and get out of my second trade 74 pip. It was a great trade that compensates for the first losing trade, okay? I hope, okay, I have also touched quickly, okay, what is a fast moving average crossover. During a fast moving average crossover, all right, for instance, if you have a bullish fast moving average crossover, one example is 20 going above moving at 50 is a type of fast moving average crossover. When we have a fast moving average crossover, there is a high chance the price will pull back first, okay? And when we have a fast bearish moving average crossover, there is a high chance the price will go up first. So the trick that we can use when we are scanning for stock is to use the fast moving average crossovers, okay? Is to use, okay, a bullish fast moving average crossover to highlight, okay, bearish trade setup. Repeat, bullish, I did not say bearish, bullish, fast moving average crossovers will allow us to identify bearish trade setup, because after a bullish moving average crossovers, the price has a high chance to pull back. So we can use that to highlight bearish trade setup. We can also use, okay, a bearish fast moving average crossovers to highlight, okay, or to identify or to scan for bullish financial instrument, because after a bearish fast moving average crossover, okay, the price has a high chance to go up first. On the other hand, I also touch upon, okay, a slow moving average, a bullish slow moving average crossover, okay, repeat, a bullish slow moving average crossover. When we have a slow, okay, a bullish slow moving average crossover, we have a ready-made, what I like to call a ready-made, okay, bullish trade setup. On the other hand, when we have, okay, a bearish slow moving average crossover, we have a ready-made, okay, bearish trade setup. Now, when we see this setup, we must apply a top-down trading method to take the trade. One should not trade the moving averages, one should trade the price. So when we see a bullish moving average crossover, one must wait for the price to confirm the warning with a direct signal. The opposite is also true. When we have a bearish moving average warning, we must wait for the price to confirm it, and we want to trade on the edge. As you can see on the daily chart, we have a bearish, okay, moving average crossover, but we have a chance to buy the Dow Jones today. All right. So key points, okay, we have highlighted moving average crossovers, okay, how to avoid moving average crossovers, okay, error, okay, two types of moving average crossovers, the fast and the slow, and also we were concentrating about how to enter the trade. Talking about how to enter the trade also, we touch upon the time, the place, and what is happening there. It makes sense? It is also powerful. If you like this video, please give us the thumbs up. If you dislike it, make sure you give us the thumbs down. All right. If you have any comment or any suggestion, put in the comment section. All right. I will put the link about okay, top-down trading method, okay, in the description area for traders that do not know how to use a top-down trading method. Okay, so you may check it out. Okay. If you love our video, okay, feel free to subscribe to our channel. Okay. If you love this video, you say this is a great video, okay, feel free, okay, all right, to share it with your friends, all right. This is the end of the video about how to day trade using moving average crossovers like a pro. I hope you have found it useful and will put into use to make excellent day trading decisions. Until the next time, enjoy yourself and be very happy. Thank you for watching, and we will speak to you very soon.